I'm Deborah Uroda, and you're watching It's Your Money with Michelle Coy. She's a certified public accountant with Tafoya Barrett & Associates, and we're going to talk about the tax law that was passed on December 22nd before the new year. And there's some really interesting changes that are going to be occurring.
So a lot of the changes related to itemized deductions. There's a lot of confusion around that, and there's a lot of changes occurring and a number of different pieces to that. So they've basically doubled the standard deduction. So that many people who itemized in the past will not need to anymore. So the idea was to simplify that. There's been some misconception that now you can't itemize. It's just that you have to meet a higher threshold before you do.
And what are those amounts for a single, married, or head of household?
So the standard deduction now for an individual single is $12,000 and $24,000 for a married couple filing jointly. And if you're filing as a head of household, it's $18,000.
Okay, and so it seems like it's supposed to be more simple, but then there are all these other little changes that we have here. Like for mortgage interest, I'm really confused about the mortgage interest. How's that going to be working this year?
So two different things related to that. So a mortgage indebtedness used to be $1 million. So if you had a mortgage loan of $1 million, up to $1 million, you could deduct the interest on your primary home. With the change, that's now been reduced to $750,000 total. And then if you have a second, like a home equity line of credit or a second mortgage that you used to improve your primary home, like remodel the kitchen or something, then you could deduct that interest. But if you used it to pay off credit card debt or buy a vehicle, you would not be able to deduct the interest related to that.
Oh, that's really interesting. So that means watch your credit card debt. It does, doesn't it? And what about state and local taxes? Can we still deduct those taxes on our federal income tax return?
You can deduct some of them, but only up to $10,000 now. Many people pay more than that, especially higher income earners, or some other states. If you are in another state, or file in another state, some other states have much higher tax rates than Colorado.
What about charitable contributions?
Charitable contributions are still deductible. There was some concern about not being able to deduct those, but that was really more related to the itemized deduction versus standard deduction piece. So you can deduct, and they actually increased the percentage that you can deduct. So it used to be up to 50% of your income. And now it's up to 60%.
Wow. So that'll be a benefit to a lot of people, and especially the nonprofits in Durango. And what about miscellaneous itemized deductions? There's one that's really important to me, and that was being able to deduct my own personal unreimbursed business expenses, and I hear that's going away.
You are correct. And so now it's encouraged to go to the employer and ask to be reimbursed for those expenses because they're no longer able to deduct those.
And the employer can still get those deductions as part of their cost of doing business. So
that's correct.
They pay you and they get the deduction.
Right.
Okay. And what about alimony? That's a big change.
Alimony is another big change. That doesn't really take effect until 2019, so it's any divorce or separation agreement that occurs after December 31st of 2018. But in the past, the payer has been able to deduct the amount of alimony they're paying from their tax return, and the person receiving the monies would include that as income and pay taxes on that income on their tax return. Both of those are gone. Starting in 2019. The person paying no longer gets to deduct, the person receiving no longer includes that as income.
Well, it certainly is complicated, and we'd like to encourage you to contact your tax advisor to make sure you get every little deduction that you have coming to you. And you can also contact Michelle Coy at Tafoya Barrett & Associates. She's brand new in town. She just moved from Fort Collins. And I welcome you to the community, and thank you very much for being here.
Thanks so much for having me.
All right.